We know that you've been calling an end to the pullback on the Kenyan markets for a while now. Run us through your expectations for the trading week ahead.
Well, we've been in a strong bull trend. We had a little bit of indigestion. I think the market was very long into the referendum, so we had a little bit of a drift lower as some of the week longs were shaken out. But we're now once again on the NSE 20 about 2.6% below the 2010 high, and I expect us to set new highs either this week or into next week. We're in a good bull channel. We had a lot of supply, we had a lot of demand versus supply imbalances on Friday, and I think those are going to spill over into this week, and that's typically the best indicator for the upward movement of the market.
Well, where growth prospects are providing the strong underpin to this market. Last week I was chatting to a few brokers about the construction of that new port along the Lamu coast, and we looked at the implications for direct benefactors, you know, the likes of your cement players, but we had started to look at the implications on trade as well. What impact do you see this enhancement having on the trade sector specifically?
Well, you know, Kenya remains the geopolitical chokehold for the region as they get out, as they export their goods, and for them as they import their goods. And Mombasa has been this chokehold for many, many years. And I think the Lamu port is really it's going to allow Kenya to cement its position and actually dominate this egress and entry route. So I see it as being a very bullish development. I think it's some ways down the road still. I know the plans are out and many speculators have moved in and bought up land in the area, but I think we're still some years ahead of it coming into fruition. But the missing ingredient, Alishia, was capital, and you've got a lot of capital being thrown at us at the moment, and I think capital is the least of our problems right now.
While that is, some of the positive, I mean, we are looking at very volatile currency movements. Of course, the bias is for shilling strength to come to the fore, and that could weigh on the export segment of the economy moving forward. Having said that, we've seen the Central Bank of Kenya jump into the market and intervene every time that shilling gets too strong. What are you making of the kind of action we're seeing on the currency front?
The central bank owns the foreign exchange market. The price moves because the central bank elects to move it. At the moment, they've targeted, I believe, a euro shilling rate because a great deal of our perishable exports go to Europe. And in fact, that euro shilling cross rate is the tail that is wagging the shilling dollar rate at the moment. It is a little bit disingenuous for them to say that they're being caught up in the crossfire. They haven't. They are the crossfire. And they're, in effect, coming into the market for very big amounts, which keeps the shilling under pressure. They've been building reserves, and they seem to be comfortable with this sort of rate against the dollar. And we're showing a very high correlation with the euro exactly because of what I've said. So really, if you want to trade the Kenya shilling versus the dollar, trade the euro dollar.
Well, are you comfortable with the level at which the shilling is sitting at right now? Are you viewing it as fair value? What is fair value for the shilling in your books?
I think the shilling would be at 75 to the dollar if the market was allowed to move as it wanted. But I think, as I said, the central bank is trying to keep the shilling at a particular rate versus the euro.
Well, we'll certainly be tracking developments there as they unfold and tracking the kind of movement we're seeing on the currency front. In the meantime, we've got a player like Kenya Commercial Bank positioning itself to tap into the horticultural export market specifically. This part of its strategy to extend its reach. What are you making of this? Because many are saying, well, it's about time.
Yeah, absolutely. I think KCB has the capital now. It's jumped the capital curve via the rights issue. And obviously, they're going to be a lot more aggressive and expansionary. And I think this is exactly a space, given their regional footprint, in which they should have been playing a long time ago. And they've left it to the likes of Barclays and Standard Chartered and CFC Stanbic to play in this space. So I think they're actually saying, look, we have the funds and we're now seeking to broaden the playing field on which we've been operating. So I see it as a positive step for the bank.
Where we've got the markets eagerly anticipating numbers out of the banking sector. What are your broad expectations on that front? Because at this stage of the game, many very optimistic about the kind of numbers we could see come to the fore.
Well, I'm still optimistic. I think, the bond market was a no-brainer. It was a one-way ticket. Most of the banks played it. A lot of the first half results were flattered a little bit by the bond gains that they've got, but underlying the operations look pretty strong. So I'm optimistic the full year will look pretty good. But for some banks who've booked their gains, I think you've got to pay a little attention. It's going to be a little bit more difficult for them to repeat what we saw in the first half.
What's standing out as a stock pick for you within that space? What's looking like good value right now?
Well, I think Equity Bank has low downside risk. It's headed higher. But my favorite is KCB, which is on a forward PE of about 11 or 10. It looks extremely cheap against all its peers. And I can see that moving up pretty smartly. That looks the lowest risk-adjusted trade right now for me.
Of course, speaking about Equity Bank, we've got Housing Finance yesterday announcing that it's issued this 5 billion shilling bond onto the Kenyan market. What are you making of that move?
I think you've had this enormous rally in the government of Kenya bond spreads, and you haven't had a similar rally in the credit spreads. And there is an appetite now to buy more credit paper, and I think Housing Finance is trying to fill some of that appetite.
Well, banks aside, Aly Khan, we've also got the markets anticipating numbers out of both Kenyan and KPLC, and some of the cloud that was overhanging KPLC having drifted off this morning with that strike action being called off. Your expectations on those fronts?
Well, KPLC is up 100% over 12 months, a lot of speculative interest. The key driver of the share price going forward is not really the full year results, which I expect to be good, but really is the amount of dilution that the ordinary shareholders are going to undergo when we finally get the details around the balance sheet restructuring exercise. The way the price has moved, which has been quite dramatic and it's accelerated in the last 4 weeks, leads me to believe that that this announcement is imminent, and that those who know what it might be are speculating it's going to be pretty optimal for the ordinary shareholders. But that's the risk with KPLC.
Yeah.
With Kenyan, I think you've also moving up. It's well supported at 17. That's why I'd like to buy it, and I expect it to move towards 20, notwithstanding the extra supply that's going to come and hit the market sometime soon.